Okay, welcome to the Capital Discussions Livevol Education. Today we have Kevin Nichols from Livevol with Jim and myself. Before we get started, we have a disclaimer that Capital Discussions is not a broker-dealer or an investment advisor. This presentation is for educational purposes only. If you don't know your situation and have no way of knowing what level of risk is appropriate for you, we're not making any specific trade recommendations. The risk of loss in trading options can be substantial, so please be aware of all of your risks prior to placing any trades. Hypothetical computer-simulated trades are believed to be accurately represented. However, actual profit or loss may vary due to market factors such as liquidity, slippage, and commissions. So with that out of the way, Jim, I think you know Kevin a lot better than I do, so maybe a little introduction. Kevin, you can say a few words about what you do at Livevol and your background.
Thank you very much. First of all, thank you very much, Kevin, for joining us in our community. I'm pretty excited about today. Kevin is the Chief Product Officer for Livevol. And the thing that I think that, one of the many things that I think that Livevol's done right here is that they didn't take a technology guy and make him the lead of the product development. They took somebody who had some technology skill, but a lot more experience as a trader. So a lot of the way we end up looking at things is the way Kevin ends up looking at things to be able to end up bringing new functionality into the product. I had asked Kevin and their CEO, Kathy Clay, if they would end up being involved and help us with some of the functionality. As you guys know, I've done several of these WebExes on the functionality that I end up using, but I only use a fraction of what they have available, including I know that many people are always looking for investment ideas. A lot of you may end up paying for different lists, okay, for trades and investment ideas, and they may or may not end up meeting what you'd really like, the way you'd like to end up trading. Within the Livevol brokerage platform, they end up having a host of different tools, including a pro scanner, which I've never really touched upon because I tend to end up doing more of the same trade every month. That's why I ended up asking Kevin if he would come on and on a semi-regular basis, maybe once a month, come on, show us different functionality that they're doing. But we wanted to end up starting with some of the things that they end up doing, including the Pro Scanner. And Kevin, thank you very, very much for joining us. Before you get started, would you mind telling us just, a few words about your background and how you rose to become the Chief Product Officer at Livevol?
Sure. Thank you very much, and thank you for having me. So a little bit about my background. I was a math major in school, and then went to Pepperdine for an MBA. I landed at a firm out of graduate school called Timber Hill, which is the proprietary trading arm of Interactive Brokers. I was a market maker, lead market maker, and then assistant floor manager for them right up through, I think, 2007. As the markets became electronic, they sort of pull up the floor operation, and rather than go back to Greenwich, I stayed on the trading floor, started my own operation, and was independent market maker through 2008, which was pretty exciting. And then I think it was about 2012, teamed up with the guys at Livevol as a consultant, and then I got brought on full time about a year ago as the Chief Product Officer. I do come from a trading background, but with a pretty solid math understanding. It was easier for me to talk to the developers and really bridge that gap from the users to the developers, and so what we've done is really put a lot of information in the platform, but a lot of useful information in particular. And so the particular feature I'm going to show you guys today is called the Pro Scanner. But you'll see it's really a jumping off point for idea generation, and then you have the ability to leverage other tools within the Pro Scanner, and then you can also sort of jump off from our Pro Scanner results to do further research on individual symbols, and you'll see we have a lot of information at your fingertips to do that research. So with that, you ready to go, Jim?
I'm ready to go. Eager and waiting.
Excellent. Okay, so first of all, the Livevol X platform, as you see here, is really sort of an idea generation engine that you can execute through. We have the platform sitting on top of a live database. We're pulling the consolidated opera feed into a database. We're also pulling in direct feeds from the exchanges for the underlying. And we put that all into a database that you can query both live data and then the historical data that we have available there as well. And so we've pre-configured 80 plus scans that are right at your fingertips, and you can see, we'll just click this one as an example, high option volume. You can see which particular series on the day had the highest volume above average, assuming they have a minimum of 200 contracts on average. And I'll show you guys how to build out your own custom scans here. But so that's the highest option volume on the day. Highest call volume in terms of percentage above average, highest put volume, and it's just literally a click of the button, and you've gone out and queried the 4,000 plus symbols that have options available on them, and pulled up some very relevant information. You can then jump off from there. So we see ecom up here now. It's a $9 stock. I'm going to click on it, and it will populate throughout my platform, so I can see what it did on the day. I can see the intraday price chart. I can actually click on the stats tab here, and I'll get the aggregate view of the information. Very, very active. I'm not too familiar with the stock, but we can definitely dig into it deeper if we want to. But I tend to work off of maybe a group of symbols that I'm interested in already. So I don't necessarily want to jump into a symbol I've never heard of before, I don't know anything about, but it's been active. That's sort of the starting point. So I might look to learn a little bit more about a company before I start putting on a trade. But for those symbols that I do have interest in, I can watch them. I've got a little watch list over here, and I'll leverage it throughout the platform. But I can build out a symbol list, and I'll do that in a few minutes. But then I'll leverage that symbol list to filter my scans. So I'm not looking just for high volume in the entire market. I'll just say, boom, what stocks are trading the highest above average in my watch list? You see, the only one that's really active is CX. So I've filtered it now, this vast database of information, to just those symbols that I care about. And so this is just one scan. I'll say, okay, high option volume, just those are really trading significantly above their average daily volume. So that might draw my attention to those symbols to do a little bit further research and see if there's something going on that I'd like to see. And one of the things that you can do, there's a few things, but one, I'll click on, let's say AGU, Agrium, and I'll go to our stats tab here. What the stats tab does, it has 4 windows: general, trade breakdown, exchange breakdown, and then today's largest trades. The general tab will provide some context for me. It gives me the stock range on the day, the volume on the day versus average volume, the 52-week range for stock price. We have some proprietary volatility calculations, so I can see what the 52-week range is for that, and the historical volatility. The trade breakdown aggregates all of our volume that we've captured on the day. So we can see of the 10,000 plus contracts that have traded, what percentage is broken down by the calls versus the puts. You can see significantly more volume on the call side than the puts. We're talking exactly. So we also capture, not just that calls and puts were trading and the volume, but we capture the bid ask at the time of execution. So you can see whether an order was trading on the bid or on the ask, and derive some information as to which side was initiating the trade. That gives you some guidance with whether the order flow is buying premium or buying volatility or selling volatility or getting long or getting short deltas using the options market. And so we aggregate that here, and you can see based on the order flow, if we aggregate it here, net deltas, the market was getting short deltas in AGU today, and they were doing it by buying options here. So they were trading a lot of calls here, but the real deltas appear to be on the put side. So they were buying a lot of calls, but the real deltas were over here on the put side. So it's kind of a twist.
Kevin,
there. Yeah.
That's kind of amazing because, one of the things, and I remember several instructors that we've worked with in the past have talked about this. And I remember them always talking, saying, well, yes, the calls versus the puts, I mean, there's more than a 10-to-1 ratio, right? It's about a 12-to-1 ratio.
Yeah.
But is that bullish or is that bearish? And people would always blurt, oh, that's so bullish. But and a lot, the answer is you don't know, because you don't know if they were buying them, if they were selling them, what they were end up doing. So I can actually see that most people would end up taking, if I looked at this in the newspaper or just at the end of the day in a Yahoo or someplace, I'd see this huge call volume and no put volume, but it's actually net bearish on the deltas.
That's correct. That's correct. And oftentimes what you see, when you just see that call volume is you don't know the whole story, like you're saying, and it could be that traders are buying that to aggressively sell stock, so they buy something out of the money and aggressively sell stock. That's one possibility for it. So it's a little bit of a it's a little too easy to look at that call to put ratio and say that's bullish or bearish. You have to dig a little bit deeper and see really what's going on with the order flow, and you can do that with our platform. That's the nice thing. Yeah. Is
it proprietary, or how are you actually calculating? Because I can see that you're doing some of the things, out of the money, and are they paying up for it? Are they buying things on the ask or selling them on the bid? How do you actually calculate what the net deltas are for the calls and the puts?
Well, as I said, we pull all of this data into our database, and we have that snapshot at the time of execution for what was not just the trade price, but what was the actual market at the time of execution, and what we do is calculate the delta on the bid and the ask, calculate the volatility on the bid and the ask, and as well as the midpoint, and then we assign those deltas to the trade. So if someone is, let's say, buying an out-of-the-money call, that'll be positive premium, positive deltas. If somebody is buying let's say, an out-of-the-money put, that's going to be positive premium because they're buying options, but negative deltas because they're buying a put. And so we aggregate that for all of the activity on the day. So and that's the nice thing. We make that available throughout the platform. So here in the bottom window, you're just seeing the top 20 trades. Well, you could actually go to our time and sales window and see every trade that happened in the market in AGU today, and then filter it as well. So there's a lot of ways to jump from our Pro Scanner back here into some very, very significant detail to the trading activity, and so it's as I've mentioned in prior conversations, that you're looking at real order flow, you're looking at real trades, and somebody is putting real money behind those trades. So we provide that information is like that you're able to consume and make some determinations on, and then possibly make a trade-off of. But before I get too far afield, let me jump back to the Pro Scanner and take you through a few of our other ones here. I know we have just started earnings season, and so I will segue back to that. I've got some custom scans I've built out that might be of interest. I've got I'm getting filtering on my watch list. I've got Intel coming up with earnings in a couple days. You can click on that and see. I've got it information confirming it. It's on the 15th after market. But if we open it up to the entire market here, what I've done is built a scan out, and let me just take you through that. It's a drag and drop capability here. So I brought in the last trade price, the time until the next earnings, just for order flow's sake, say out of the money calls trading on the ask, out of the money puts trading on the ask. So are people buying volatility and buying those really out of the money options that are going to give you the most bang for your buck if there is a extreme move in the underlying. And then I've got an average volume or option volume and an average option volume on the day. So right now I'm sorting just by option volume, so you can see for the group that has earnings coming up in the next 4 days, Bank of America is the one that is trading most above its average volume, and a fairly significant number of options trading on its ask. So again, we could just take that same step through and look at some of the order flow. One of the things that jumped out right off the bat here is in looking at the order flow, we've captured down here all of the details. So this is the time the trade went up, the details of the particular option, quantity and price. Now we've color coded it here so that we can see whether or not it's trading on the bid or the ask. So we can see we've got it 13 cents. That was the ask price. So somebody's kind of stepped in and lifted the offer here for these options. Same here, they're actually stepping in, and it's actually a locked market, so it's kind of hard to tell exactly what's happening, but we've assigned it to the bid side here. But these are intermarket sweep orders, so that is somebody basically coming in and just lifting offers across the board or selling bids, and that's somebody that's anxious to get a trade on. And so the fact that this is, front month at the money with 2 days to go is pretty telling. So we'll definitely watch that going into the earnings event, which is basically the 15th before market. So tomorrow's the last day to do any trading in BAC before we have earnings. Let me just pop back to show you guys a little bit more. On the earnings side, I've got, let's see, do I have this set up? I do. So what I've done here, and I'll just build this out again. Let me just edit it real quick so you can see how easy it is. I've got Sigma 1 versus Sigma 2, option volume, average option volume, the last trade price, and then days to earnings. So let me close that one, and I will delete it. We'll build it back out just to see how easy it is. So I'll go into Scan Builder. All right. And I'm going to bring in my volatility differences, which is Sigma 1 versus Sigma 2. Now what Sigma 1 and Sigma 2 are, Sigma 1 is the first expiration, and we look at the regular third Friday expirations for these purposes. So we're looking at, basically the front expiration and then the second expiration excluding weeklies. And then let's bring in, so I've got Sigma 1 and Sigma 2. Let me bring in option volume. Actually, average option volume. I'll bring in last trade price for reference purposes, and then I'll bring in the earnings date down here. So it literally is drag and drop. Very, very easy to build out days to next earning date. Very, very easy to build out your scans. And let's sort it by option. Actually, let's do it. I'll do it this way with Sigma 1 versus Sigma 2 in descending order. So I'll look for that biggest gap between the two. All right. And let's throw in, say, a minimum option volume. So I see this right off the bat that I have the top one is a symbol that has basically no volume. So let's run this up to say 5,000 contracts. I'm just previewing it right now. Minimum average of 5,000. So we want something that's above average and still pretty active. And then ACI Arch Coal is it's an interesting stock, but it's a very low dollar value. So let's say we kick it up to 20 bucks. And there we go. Now we've got something to look at. So I'm going to save this scan. I'll call it let's go Sigma 1, Sigma 2. Just
Kevin, could you, because I know that some of our members don't use the term sigma when they're talking volatility. Can you just describe what what you mean when you say Sigma 1 versus Sigma 2?
Absolutely, absolutely. So what we do, we basically are looking at the money volatility for a specific expiration. So what we'll do is very similar to how the VIX calculation originally was done using about 4 strikes around where stock is trading. You'll look at you'll weight the implied volatility of the options around where stock is trading, and in essence come up with what would be what we would call an at the money volatility number, and we refer to it as sigma. We can't really do expiration 1, expiration 2 like that because there are weeklies. So we choose to use the term sigma, and what we're looking at is the at the money volatility by expiration. So when you're in our pro scanner and querying, so let's say Sigma 1 versus Sigma 2, what you're saying is what is that at the money volatility of that front regular third Friday expiration versus the second third Friday expiration, and we're just looking at that differential between those two at the money volatilities. So we have in our, let me just jump over to SLB real quick. So if we look at our skew chart, and I just go my my front expiration versus my second, when I say third Friday expiration, when options were originally listed, they were expire on the Saturday after the third Friday. Subsequently, the exchanges have started listing weeklies and quarterlies and that, but that's regular at the money, that regular expiration still is the most actively traded series, primarily because it was scheduled to fall along with the regular earnings for a company. So that would tend to be the ones that have the largest open interest. So we do definitely capture the at the monies for all the weeklies, etc. But when we're looking at that longer term skew chart, we really focus on those at the monies or the regular expirations because that's where the real liquidity is on a day in day out basis. So when I'm looking at that differential in my scanner, let me just drag my skew chart over for a second. When I'm looking at that differential in my scanner here, where it says Sigma 1 is almost 40 points higher than Sigma 2, what we're really saying, and I'll just expand this a little bit, is hopefully it'll show up on your screen a little bit better. What we're really saying is that Jan expiration, Jan 17th is the regular front month expiration, and February is the next regular third Friday expiration. We're looking at that at the money volatility differential. So we're looking at the gap from here to here is that substantial. It is almost 40 points differential, which means in the nearer term they're going to expect volatility to be significantly higher than over the time between now and February expiration. Now that completely makes sense given the fact that we have an earnings event scheduled for the 15th after the close. Stocks tend to need a catalyst to move, and earnings typically are a catalyst. that the event sets out how the company has been doing and what is management's focus going forward. So it's really a catalyst for stock movement. And I can actually jump over. Go ahead.
Hey, Kevin, one quick thing. If you just pull up the skew chart real quick again, either that or any other underlying that's going to have earnings over the next couple of weeks.
Okay.
One of the things, okay, and that's great. And just leave the whole thing in. Just maximize the skew chart for a second.
You got it. You got it.
One of the things that I end up always looking at is that I can usually immediately tell, like, this is the front week, so it's maybe a little bit more difficult. But if there's a large gap between 1 week and the next week, and it's not like this normal progression where it's getting slightly larger, a little bit larger, a little bit larger, a little bit larger, you know that there's an event, right? 99% of the time it's going to be earnings, unless it's a biotech company. But you know there's an event in there. So you can actually see, just by looking at the implied volatility in the skew curves, where your earnings are. Okay, it tells you a tremendous amount of information, okay, on that chart.
Absolutely. Now we have a 3D chart here, so you can actually see how it sort of drops down and just how significant that spread is. And if you were to look at this with earnings, let's say a month or two out, if you had a couple expirations that were before it, in fact, let me check one symbol here real quick. 128. I'm looking for something that might be a little bit further out. Let's see. Going to our calendar. Let's see. Well, the 28th we might have at least one expiration there. So let me just jump on there. Yeah. So this is a good example. So with Facebook, it has earnings on the 28th after the market. So it actually has two expirations. I'll go ahead and turn this off. It actually has two expirations of weekly options before that earnings event. And so what I'll do is show you just how significant that is. If I look at it head on, I'm going to turn it a little bit, and you can see that this expiration, which is Jan 17th, is significantly lower at its bottom, which is the midpoint, than right up here, Jan 30th. So looking at this, these two first expirations are basically letting you know that the market is not expecting a significant move in Facebook before that earnings announcement, which is that green line up here at the top. And they're really pushing in a lot of volatility into that event, basically saying earnings are a significant event for Facebook, and that's how it's being demonstrated. And we can actually see that. I'll jump over to our chart here, and I'll break this out. Now, what we talked about as far as sigma 1 and sigma 2 is that front expiration and second expiration. Well, the problem with looking at expiration specific volatility is that as basically time decays, that it's only going to be around for a month or 2 months before it expires, and you can't really track that long term. So what we've done in our platform is create some static time volatility. So we basically say if an option, sort of like a hypothetical 30-day option, very similar to the VIX, we come up with what's called the IV30, which is 30 calendar days, and we interpolate between various expirations to determine what that hypothetical 30-day is. And you can see going into earnings events on our chart here how volatility spikes in anticipation of the earnings announcement. And so with the case of Facebook, if we overlay our historical stock movement, you can definitely see that earnings are a catalyst for movement in the stock. So that's why for Facebook in particular, you'll see a big gap in that skew chart, specifically around the earnings event. So we'll just leave those three up there, and you can see it's significantly elevated compared to expirations before it and then the expirations after it, just because it's just a very short time until that expiration, and you're going to have one event that the market expects to be very significant for the stock price. Okay?
Very good. Thank you.
All right. Okay. So so back to the scanner. We've got. I tend to use it. I've given you a couple examples of the scans I look at for let's say stocks coming up with earnings. I can definitely filter by my watch list if I had if I have other interest in earnings. Let me just jump on that real quick. We have our calendar tab, which is very handy both for managing your portfolio risk, because I can filter all of the earnings and dividends information here by symbols in my portfolio. So think of it as like a watch list that is just all of your symbols, all of the symbols that you have a position in. So I can see earnings and dividends coming up. Our earnings and dividends information is provided by Wall Street Horizon. We are very confident in them. We think they're a great partner for us for data. And so they let us know if there's a known confirmed dividend, and then with earnings they'll either say it's confirmed or not confirmed, and you know that'll provide some information for you. But I'm scanning right now, just on my portfolio. I can look at all symbols or all optionable symbols, and I can see what's coming up in case I'm interested in saying, okay, I'm interested in looking at earnings, for example, in a symbol that's coming up. I can definitely dive in from here, again, going back through my steps of, you know, bringing up the information and you know, checking out stats, what's happening in the stock, how's the stock been moving, and then you know, sort of keep doing some research. But just to emphasize, you know, sort of how to follow order flow and how to leverage it within our platform. You know, one of the things I did was break out order flow by sector. So you know, with a click of the button, I've basically built out a scan that shows me option volume on the day versus average option volume, and then I've got it grouped by sector. I can quickly see Alcoa had earnings. They're the busiest one in the basic materials today, but GM very active today, and with a click of the mouse, I'm over here looking at, okay, we've got earnings coming up in a couple weeks, so that might be of interest to me. So I might keep them in mind, especially given that Ford. So definitely something in the automotive sector is kind of piquing my interest at the moment. Tesla out there as well. So just very, very easy to dive in to the activity in the market. I mean, you're looking at the entire market, and we've sliced it up here by sector, and I can, you know, quickly identify, okay, what stocks are hot in that sector, which ones are active, and do I want to get involved in it. Some other ways to use this, we can probably find out pretty quickly which stocks have had the biggest move since since the close. Well, we can actually build out another scan and say, you know, show me which stock has had the biggest move since the open. So not just moves from the previous day, but moves from the intraday. So it looks like, let me rank that by ascending, and we'll see which was the biggest downfall today. And kick it around and see the biggest up move. Now, again, the nice thing about this, about these scans, is that you're not limited to just the whole market, if you will. I mean, this is a lot of information. If you want to tailor it more towards your needs and towards protecting you, let's just go ahead and save this, and I'll say, okay, intraday move. I'll save it, and it's in my custom folder. I'll close it now. I've got my intraday move. I'm going to filter it based on my watch list, and now it's just the symbols that I'm watching already. Hey, which stock is making that breakout move that I'm looking for? You know, is it happening today, intraday, or not? You know, it really allows you to tailor this vast database towards your personal needs. I would be willing to open it up to questions if you've got any there, Jim, or if you'd like me to emphasize any other specific points.
Yeah, you know, one of the things that I would end up liking, and we talked a little bit about this, it's, you know, I've always used the expression that, and you mentioned this before when we were talking, Kevin, that if somebody's going to come in and put in a massive trade with, you know, huge capital behind it, there's a pretty reasonable chance that they did a little bit of homework before they put the trade on.
Yes.
So, right, I use the expression that elephants leave footprints. So when you're taking a look at things, you know, I can tell you that I've used the scanner, okay, a bunch of times to end up finding just some massive trades on the top 10. Do you have a scan where you end up taking a look at either just, is it just volume, is it individual trades? Is it, and by the way, were they buying or were they selling that spread? That was one of the problems that before, you know, I was using LVX. Okay, so somebody put on, you know, a 5-point vertical call spread, you know, above the money. Did they buy it or did they sell it? I didn't have a clue. Okay, with the stats tab, I was able to end up doing that. Is there a way that you, and I don't just do this on a routine basis, is there a way that if any of our clients wanted to end up seeing, or any of our members wanted to end up seeing, you know, heavy volume on that, how would they go about doing that? Do you have a scan like that?
Well, I found this one a little bit earlier. Let me just double check. I've got the right symbol here. It was, yes. This is actually kind of interesting to me. So this it was on the Pro Scanner. We saw I think it was CSX. It was up there earlier, but down here we've got above average volume, and it takes a little bit of just, you know, sort of poking in and seeing what's up. But it was UNP here, Union Pacific Corp. Had definitely had above average volume. Is not quite 200%, but 21,000 contracts on the day. And so it was in my above average volume scan here. And when I go to the stats tab, one of the things that you know, you quickly see here, again, the 20 largest trades on the day. This is you know, these are the big fish, right, if you will. And here's a straddle, right? And looking at the prices, it was tagged as a straddle on the ISC, 1,750 contracts. And if we just pop over, one of the things I do check on this is on our montage. And let's see if I got it. Okay.
And when you come back, just tell us the colors again and how they're color coded.
Well, this is color coded. In this case, it's blue, which is actually letting you know it's trading outside the MVBO. It's actually trading below the bid here, and then this Feb 115 put 1,750 contracts. So it's definitely part of the same trade here. Was trading inside the bid ask, right? So we've got one part of it trading on the low end and another one trading inside the bid ask spread. So it's definitely not lifting offers. So it's given the fact that volatility is up, it's probable that they are buying volatility, but not definitive. And if I took a look at the montage, and let me just pop back real quick. I'm sorry, pop back here. It's February expiration, so I can scroll to my February expiration here. Actually, just click down Feb 20th expiration, and I've got 115, 120 trading right here. Now, the interesting thing is you can't definitively say that the volume is opening here. But looking at the side over here on the 15 line, the volume is greater than the existing open interest. So I'll let you know that's an opening trade. So that's new interest in the stock. I think I saw another one. Just to jump around a little bit, same sort of deal, specifically with the straddle. I think it was Monsanto. Let me double check my stats here. And this was the largest trade on the day. Now it's in black here, which means it was taken down and then reprinted, and you can see it here going up late. But in this case, we're looking at as opposed to a strangle in the last trade, a straight-up straddle here because it's the same strike, Feb 20 strike. It actually went up 5,000 times. Now, the initial print, this is really handy. We're talking about on a spread of what do we got? 16 cents here. It's trading a penny above. And on this one, it's actually 2 cents above the bid. So it's quite probable that the order flow is selling in this case in Monsanto. So if we look at the Feb 20 line, Feb 120 line in Monsanto, we see massive volume on both sides. And the interesting thing here is you definitely know the order flow is now opening. So we know that. The order flow is opening. It's probably selling, and one other telltale is looking at the at the money volatility, which is what this trade is. At the money volatility in February is actually down, which is sort of a further indication that the order flow was selling. Generally speaking, if the market makers are buying options, the next step is to drop the volatility because they're looking to entice someone to come in and buy the options back from them. So in essence, you can discern that you've got a large trader coming into Monsanto to sell volatility in February. Now the interesting thing here is it's on the 120 line, which is a little bit above where stock is currently trading. So you could infer that the individual is expecting not a lot of volatility, but also that there would be some appreciation in Monsanto towards the 120 strike, which is where they would maximize profit if stock is trading right around 120 at February expiration.
That is really interesting. One of the things that I'm looking at is the different vols. So you can end up actually seeing, sometimes, and I know that in options communities, I've seen this mistake where just because the front month or the first couple of weeks IV is moving up doesn't mean the longer term volatility is moving up. You can actually see that being in a difference. And, a lot of times if people are trading multi-month calendars, diagonals and stuff, that's what they're really doing, right? They're making a bet on that, this particular month, this far out is going to end up moving, staying where it is and move higher, and the other one's going to end up moving down. And you can actually track that and see what parts of the curve or what part of the term structure is becoming more or less expensive.
Mm-hmm. Yes, absolutely. That's one of the nice things here. We can track that. You can actually scan for it on our sigmas to see if there is a differential or a substantial differential. Oftentimes there's emphasis on the fact that stock has a particular earnings or has earnings in a particular expiration, but what you tend to find is, after that initial move, due to the announcement, there's often continuation, and so that if there's news out, that volatility may continue well through that front expiration into the next one, and there'll be people that will basically buy time spreads, counting on that, or believing that will continue, and that the volatility in the front expiration is elevated beyond its basically elevated beyond appropriate levels for the pending event.
Okay. And if I wanted to see how that pending or those earnings ended up actually moving, the vols in the front month versus the second month, say for the last 8 earnings, how would I do that?
Well, that's on our earnings and dividends tab. So let me just jump over to Facebook if I can, just because that's That's a big earnings mover. So what you're looking at on our earnings and dividends tab here, first case on the left-hand side, just the historical earnings, the estimate and the actual. So you can see that Facebook has done a pretty good job of beating the estimates. And then if there were dividends, Facebook doesn't pay a dividend, but that dividend information would be here. But what we do is sort of track going into and out of earnings events. So we have the previous 8 earnings, and we show you how the stock moved the 5 days into and the 5 days out of the earnings event. We show you the price of the front 2 expiration straddles, the at-the-money straddle. So how did the at-the-money straddle move in terms of price over that period? And then here at the bottom, we show you the volatility and how that implied volatility moved for both expirations. And I'll just click on it right here. So we're looking at the April or the May 1st earnings announcement for Facebook. And so we're looking at the May expiration and then the June expiration for our two straddles. Those were the front 2 expirations. So we can track over time, how did the stock move? What was the price change in the straddle, and then what was the volatility change in those straddles as well? And this is a great way to visualize the what we call the vol crush, the post earnings volatility crush, which the market's expecting a move, and that's why volatility gets inflated. And then once that move happens, or once that event happens, then it's sort of, if you will, status quo, that the volatility returns back to a more normal range, and you get this post-earnings volatility crush. It's very, very significant in the front expiration, really, depending upon how much time is left. If you think about it, if I have an option that is expiring in 30 days, and I know there's going to be one earnings event that's going to be significant, it's going to have an outsized impact, but not nearly so much if it's 1 day of a 3-day option or 1 day of a 2-day option, where it's just that one event is so significant that it's going to drive up the volatility for that particular expiration. It doesn't get dampened out by more normal days in a longer term expiration, or like it does in a longer term expiration. So you get to see that volatility crush. And it's significant because the market is pricing in a certain move, and if it doesn't happen, that volatility is going to come in dramatically. It basically, once the event happens, it'll go back to a more normal volatility, even though there may have been a big move, just because it's like, okay, the big move's over, and now we're back down to normal volatility. So here we can track how the stock moves into and out of earnings, and you can see, basically how that straddle has performed throughout the past 8 earnings cycles. So it's just another way to look at the earnings event and figure out if vol is high versus historical, if the market is expecting a more significant or less significant move than's been in the past, and basically help you put the odds more on your side on a trade, and be more informed as to the possibilities of movement on an event such as earnings. So looking at this, you can see just these big swings with the stock in Facebook, to know that, okay, earnings is a significant mover for the stock, and I definitely want to keep track of that. If I'm going to be in this stock, I definitely want to know where earnings is. If I'm selling volatility, I want to make sure I know whether or not earnings is in that cycle or not.
Kevin, can you make a comment about, because IV drops significantly, and all of that extrinsic value comes out of the options, you can still get run over if the stock moves far enough. So how do you take a look at the movement of the stock versus the drop of the IV, and how much risk is it in a particular move, or what's the worst that had happened in say the previous 8 earnings?
Oh, good question. Well, looking at this, you can definitely see just the price change in terms of percentages. You'd have to work that out. But I mean, we're talking about day before. This is looking at you're looking at a 730 straddle, and then 2 days later it's 1060. That's a significant move, and even though there was a volatility drop, I mean, we saw the volatility come in substantially, and yet because of the outside move, and when it went from 54 to 62, 61 overnight, it's a 10% move. The market wasn't pricing in enough of a move there. So the volatility crush offset some of it, but the bottom line was that the straddle was underpriced for the move. There was actually one, I want to say it was, and we can sort of back into this. KBH was down substantially today, and I'll just drop. Let me go back to our chart here. What I'm going to show you is. Right down here, I'm actually going to pull up, so this is the closing montage from today, and I'll take it one step back. So here we are, Monday, January 12th, going into earnings. So the closing markets were, the stock closed 1657. Volatility was definitely elevated going into the announcement. And I can look here, and it's sort of between strikes. But if we looked at the straddle, let's say the 17 straddle or the 16 straddle, in either case, we're looking at call it $1.20, $1.20 there, and about $1.10, 80, about $1.20 here. They're pricing in a move of about $1.20. That's one standard deviation move. It's sort of a given that it's only got a couple days till expiration, they're not pricing in a move as substantially as we saw, and they're expecting a 68% chance it's going to be inside that $1.20 range, and turns out it was it was substantially more than that. So if we were to look at
Kevin,
KB,
that was so important. Can you show again? How did you actually pull up this chart?
Yeah.
Okay, and then go back a day.
Oh, okay, fabulous. So it's on our charting tab here, and it's for lack of a better term, it's like it's a little hidden present. It's a gift down here. You can literally just click on one of the volume bars, and it brings up the whatever day you clicked on. So I clicked on Monday. But I can go back and forth in time just using
I can click on any one of those volume bars, and I can pull up the stats for that day.
Absolutely. You can pull up what the implied volatility was, the stock movement, the volume, the 20 largest trades on the day. So it's very powerful. There's a lot of it. Like I said, there's a lot of information available on our platform, and this is one of the things that is just it's so valuable to be able to go back and research trading activity. So if you see someone, for example, that's putting on a large trade and it might be closing, you can actually go back in time and say, okay, when did they open that trade, and is it a winner or a loser for them? Or if someone's rolling up or rolling down, you can figure out if they're rolling up or rolling down, a winning trade or a losing trade, and that might give you some intelligence. For example, if someone is basically closing out a put position and opening up a lower put position, well, I might really want to know if that person was correct with their first assessment, and if they're putting more money down, or if they're taking money off the table, so we have the ability to go back up to 2 years and look at the trading activity on the day. and then you can actually dive in deeper. We show you the top 20 trades here, but if you want to see what else was going on that day, you can actually go to our time and sales tab where you can see trading activity back to 2 years. You can see the full scope of activity over that time period. So it's
that is actually, I don't know if people end up realizing, but that is actually kind of amazing. It's not just a using a back testing tool with somebody like with some of our other partners like Option View, but here you're actually seeing the movement and what caused a lot of that movement.
Mm-hmm. Yeah,
that's pretty significant.
Oh yeah. That's and it's really interesting to to figure out. Okay, was somebody was somebody making a play on earnings? In this case, it doesn't look like there was a lot of activity. There was one very, very large trade, but it's mid-market, and it's basically it's a slightly in the money call. So they could have been shedding deltas, which is a possibility, or if they're carrying a long position, they might have been hedging some of that by selling these calls. So, but there are other times when you can go back and see order flow. I mean, was it Ackerman's trade in Allergan, for example? You could actually see that hit the tape. You can actually see it in our volume here. It's a ways back, but that activity, that unusual activity, definitely shows up, and you can identify it while it's still actionable.
This is what I end up meaning when I say elephants leave footprints, because they can't hide their volume.
No, they can't. It has to hit the tape.
Hey, Kevin, we had a quick question. Does Livevol support futures and futures options yet?
From not within the platform, the broker-dealer does allow trading in futures, but we don't actually have that data in the platform as of yet. So you can trade through it. You can trade them. Yeah, you just you have to go through the workstation to do that. But we do allow it, which is opens up a new market for us. And so we're excited about that.
And what can you share with us? I don't know if you're allowed to share with us the time frame that you're looking at doing that.
Can't really do that. We're mapping out the roadmap right now, so I don't have a firm hold on that. But you can trade now. That you do have the ability to trade futures now through the broker dealer. You just we don't have it available in the platform as of yet, and we need to work that in.
So is it correct to say that if you have a Livevol account, you can also use a Trader Workstation to do executions?
Absolutely, yes. So we are integrated so that if you have an order, if you have a stock or option order working in Trader Workstation, you'd see it reflected in Livevol X, and then if you had something in Livevol X, it would definitely be visible in Trader Workstation. So we wanted that ability to see that information in both platforms, because some people are more comfortable with execution through Trader Workstation and are more interested in doing research on our side. So it's we get the best of both worlds.
Now, Kevin, I know the things that you were working on that. So you have the real-time links now, so that if you're doing it in one, you can see it in the other, or vice versa?
That's correct, yes.
So if I can end up if I'm an IB user,
yes,
okay, and I sign up with Livevol, I get all of these tools and I save a nickel, right? Because your commissions compared to IBs are a nickel less per contract. And if they sign up, okay, through our community, you and Kathy Clay were kind enough to give, our members an extra nickel. So that means that if they ended up signing up through the platform, they get all the extra tools, all of the extra stuff, and the cost is that they save a nickel, save a dime, actually, if they signed up through us.
I believe that's correct, and you also get excellent customer service as well.
Okay, now I'm trying to think of a reason why, if I'm an IB client, I haven't done this, because it's been costing me money for a while, and I can't think of a reason. Can you help me out with that one?
Well, it's I really can't tell
The
you.
answer is no.
I can't tell you a good reason either. No, sir.
So
You can see that Kevin didn't grow up on the sales side, right? He already told you he grew up on the floor side.
Kevin, if you have a Livevol Securities account and you're trading through Trader Workstation, do you have access to everything that IB has? For instance, Forex trading too?
Right now, you are limited to, I think, you're not able to do Forex trading at the moment. We've opened up the futures market, and we've opened up, I believe, bonds and mutual funds. It's an approval process, and so we have to continue to open that up. I will tell you that there are ETFs that basically track the currency market, so you can, if you're interested in trading those, that's a possibility. But actually, straight up trading currencies, you cannot do it through a Livevol Securities account right now.
How about non-U.S. Options, like options on the Euro Stoxx 50 or the DAX?
I'd have to check on that one. I am out of my depth at that point. I'm not actually a licensed rep of the broker dealer, so the ins and outs of what's available, I'd have to table. But I can get back to you on that.
Okay, great.
Kevin, a hint: you're talking to an IB client. He's an IB client.
Okay. Yeah. So I will have to check on that for you.
Okay. So we've been going just about an hour. I don't see any other questions. Tom, did you have anything else?
There was one question about, I think you had an Intel chart up, and it had a few spikes on the prices. So he just, Ray asked, are those spikes on the chart bad prints or real?
Well, actually, what these are, and we're going to clean it up in the we have to evolve with as the market changes. These are actually average price trades that are now having to hit the tape. So before they were not hitting the tape at the exchange level. So we'll be taking these out of the tick chart here, I expect, within about a week, and then we will. They'll still be in all of our aggregate volume data, will be in our aggregate stats, but for purposes of displaying the intraday chart, we're definitely taking those out because we find them a little bit distracting. So that's what these are. These are actually average price prints that are going up, and so it's basically a new way for larger firms to trade on an average price, and that's what they're doing. Okay.
Great.
There is one more question that just came up,
okay.
And they ended up asking, is IB the only, I guess, executing and clearing broker behind Livevol?
So the Livevol Securities only has the introducing relationship with Interactive Brokers. There are some clients that are using Livevol X and clearing through other firms, but that's outside of the Livevol Securities arrangement. So Livevol Securities only has that relationship with Interactive Brokers. We figure it's cleanest that way. We know our partner, and we're basically aligned in the interests.
So in other words, the thing is that for some professional traders, you have more of an Obsidian type of relationship where they pay you a monthly fee for the software.
Yes.
Okay. So the answer to everybody is, from a retail perspective, the only way you can open up a Livevol Securities account and get the software and have everything be part of it is if you have a clearing and executing through IB.
That's correct. Yes.
Okay. Yeah, I just wanted to make sure that everybody understood that. So it's that's the way the platform ends up working. Now, I've been using this for a while, and I will tell you that a lot of people went through some, I'll call it unpleasant experiences with Thinkorswim when they were first bought by TD Ameritrade, because all of the execution that used to be reasonably good TD, I don't know if you know this, but TD was actually had a contract with the Amex, and they were in breach because they didn't end up giving them the amount of order flow that they had, that the contract dictated that they had to. So at least when they were first taken over, if I ended up saying best, that you might as well have put in Amex, because that's where it was rooted to. Some people have the same fear of IB, and because you actually started at Timber Hill, I know that if I send my order through IB, it's going to go to a Timber Hill desk or the Timber Hill system. Can you end up making some comment about the quality of execution and are people giving up anything at that point, or what do you end up, what can they end up expecting from an execution point of view? Because I'd say that is probably, for some of our more active and larger traders, that's probably their single biggest fear about IB.
I see. Well, as somebody who started out at Timber Hill, and having worked under Thomas Petterfee there, I know that his primary concern is efficiency, and I know that Interactive Brokers continually ranks as the #1 broker for best fills, for price improvement, and I don't. I think in his approach to order flow and his brokerage business, I can tell you that the trading business is a very, very small part of his brokerage operation, and the primary concern is getting best fills for his clients. And as I have traded through the platform, I have been very happy with the fills that we've received.
I have also. I mean, the thing is that I was one of those people that was very hesitant, very reluctant to end up taking a look at it. But I'll end up telling you, the thing is that I ended up looking at, and we did some side-by-side comparisons, where I put in orders at the same time through IB or through Livevol, through IB directly. I'm getting the exact same execution, so there's no difference whatsoever there. But I was also end up looking at Thinkorswim. We will also end up going through something like maybe an Obsidian, which is a professional platform, and then having a routing engine, okay, that I'm paying to end up being on the routing engine, right? They're not doing anything in terms of filling my order. They're just trying to end up going to the best fills, okay, and using a Dash routing engine or something like that. And I will say that my IB fills were very, very close to where I was actually paying for my routing engine, paying for my software, and sometimes it was actually even slightly better. Not often, but it was. Whereas, the Thinkorswim execution continually ended up being lower on the scale. And, one of the things that I ended up finding out, or, I ended up realizing, when you actually do the math and saying, well, if I was saving, 15 cents a contract trading here versus there, but when you end up doing, realize 15 cents a contract is 0.15 cents on my fill price. It's not even a full penny. It's 0.15 cents on my fill price. So when I take a look at, where I should be running things, the lower commissions, okay, going through Livevol, and the extremely good execution, I really couldn't figure out a reason why I'd want to end up being someplace else. So, I've been very, very happy, and I just want to end up doing that. We really appreciate you coming. We hope that, we can end up making this thing a regular basis. If you can end up fitting us in your schedule, we would love to end up seeing, functionality, or even just, specific trades. If you ever see, specific things at the end of the day and you have some great examples, we'd love to end up having you as often as you can end up sparing time for us, and we appreciate it. Thank you.
All right. It would be a pleasure. Thank you very much for having me.
Tom, what I'd like to end up doing, if you just take the ball back, and I just want to end up reminding everybody, you know, the relationship and what we've been able to end up doing for our community is that if you're interested in opening up an account, you know, any place on the Capital Discussions website, we have Livevol banners. Click through that. Okay, click on that before you open up your Livevol account, and Tom has done all of the work for you. So reports are done. Okay, they'll be filed with the appropriate people. You should end up having it. They'll be checked up on. If you have any issues, you can always send us an email. But you should end up getting that automatically. The other thing that we've been doing is that we will be using the scan tool, okay, within our covered call class that we're doing right now. So what we're in the process of doing, we just had our first class. We're going to go through some technical analysis. We're going to go through some fundamental analysis. And what we're going to end up doing is that we're going to end up having a candidate list. What we're going to be doing is we're going to input the candidate list into Livevol to end up taking a look at, you know, where they are, what their implied volatilities look like, what are the better trading opportunities off of a pre-generated list that we've already done. You can see on most of the web pages, right on the right-hand side, just click through it. That'll end up getting you, you know, your nickel. For those who are members of our covered call class, you guys end up getting a dime. Okay, that was the way we ended up structuring things. You know, we're trying to form a partnership, so what's good for Livevol is also good for us, and we really appreciate all of their efforts, and they're willing to end up working and helping our members. So it's thank you, Kevin, and also thanks to Kathy Clay, their CEO, who's just been a big supporter, and we appreciate everything.
Well, and if people are interested in that 10-cent discount, if they join our covered call class, they can get that. And if you just go to Capital Discussions at the top, there's that green banner. Click on the Learn More. You can read about the class, sign up, and then you'll be eligible for that 10-cent discount. And that could easily pay for that class. So just if you trade a lot, it might be worth it.
Okay. Thank you very much, and we really looked forward to seeing you again next month, Kevin. Thanks for your time.
All right. Thank you.